Hello and welcome to the Saxo Bank morning call for August 14th. It's a Tuesday. We're seeing a little bit of a calm after all this Turkish lira storm, folks, although I think plenty of signs of nervousness across markets still, even though we're seeing a bit of a bounce and a lot of this correlations heading to one risk on, risk off behavior. On the macro and FX side, I'll be concentrating a bit on euro-dollar levels. Especially, I think the action in dollar-yen is just providing a very interesting sort of wrong note in terms of historical behaviors across markets. And I'll also be talking about the Turkish lira a bit. Peter, we've got the VIX up towards 15 yesterday, but not massive losses in the markets. Is that your focus today?
My main focus today is the volatility move in the VIX, as you mentioned, and then I will be talking about Chinese equities, and I would like to talk about Turkey, implications for emerging markets, and the contagion risk there.
Right, and then I'll tell you, of course, on the bond side, everyone's focusing on risk of default now. That's where we've gotten to in this Turkish situation. But you're talking a little bit about it feeding into other places, right?
Exactly. So we are going to talk about the volatility in the emerging market. We are going to zoom in and looking at the countries that are more leveraged and so more at risk of default. And then we are going to discuss briefly about Italy.
Italy. Okay, good stuff. Yeah, so what I wanted to look at today was we have this Turkish lira bouncing quite a bit this morning. I'm not sure what is driving that. Maybe some flow. Maybe Turkey has some new friends. I don't know. But we are far from believing that this situation has climaxed for now. We think that we've sort of gone beyond the point of no return without any evidence of a behavior change from Erdogan. So we look at the 7 level as perhaps tactically a very important level in dollar versus the TRY in terms of whether this hits a new phase of risk off across markets. I think looking at the calendar today, developments in Turkey, one of the things that sticks out besides a couple of appearances from Erdogan is a foreign ministry appearance, a press conference with the Russian foreign minister in Istanbul. The time I've seen is 12:30 p.m. local time. I think that is GMT +3. So keep that on your calendars. Keep that in mind. Are we seeing some sort of geopolitical shift? Have we seen Erdogan's relations souring so much versus some of his traditional allies, or Turkey's traditional allies, that we're seeing a shift there? A very important signal potentially on the geopolitical front, and of course that would also have financial market implications. Now in financial markets, in currencies, we're seeing the dollar strength easing a bit here. Risk on, risk off. Risk off means dollar strength. But to me, if we look at our chart here, dollar-yen moving towards back up above 111. Now, of course, we've seen a bounce in these risk-related pairs, but this bounce has been so large that I'm wondering if the whole global liquidity squeeze problem with the dollar. After all, if you look at EMs, what did they borrow in? Some of them borrowed a little bit in euros, but most of them borrowed in dollars. So if we are seeing it go back to risk off, could the dollar even outperform the Japanese yen? Traditionally, the yen is, when we're seeing global risk off, we see the yen appreciating on the idea that Japanese savings abroad are being repatriated as they slosh around in capital flow terms. But if the stress point is on all of this dollar lending and dollar-denominated debt, then the dollar could outperform. So technically, beginning to look like the bears are in trouble on that dollar-yen chart. And I think that's an interesting point potentially going forward. And then, of course, we are definitely keeping our eye on the dollar CNY for now, and that 7 level. But in terms of risk on, risk off, Peter, I mean, I talked a little bit before we started the broadcast that we've seen a little bit of a comeback or a drop in equities, but the VIX is quite elevated to me. I mean, up at a 15 handle rather than below 11, which was approximately where it bottomed out recently. So it feels like there's more nervousness than maybe the swings are.
There is. 15 is definitely higher than 11. For some context, the average is around 18 to 19 on a historical average since 1991. I have multiple times here at Saxo, at least past year, been saying that the critical point in the VIX is always around the 21, 22 level. That's where you get the big shift from risk on to a risk off mode. So I think we still have a little bit room. I also look at some of the credit spreads. I do think that things seem to be a little bit controlled. Also the European banking sector, I watched that yesterday. Yes, we're seeing some cracks in Italy, France and Spain, with Spain obviously being the most exposed country with around $80 billion of foreign bank claims into Turkey. So that's sort of the weak link. But I also have put on a chart with me today that I want to show you, because there was a lot of action still going on in the Chinese equity market. And if you look at the Chinese equity market, it's stabilizing at current levels in the CSI 300 above 3,300. And but inside the technology sector, we have now seen a little bit of a carnage. So we had a company called Sony Optical, which is one of the biggest optics companies in the world, providing optic lenses for smartphones. And if you look at the chart, again, you can see here the share price is down around 50% in 2 months. It's a massive move. I'm not particularly worried yet still. I think the broader market has stabilized, but I think this is a sign that at least there are cracks, because there are a little bit of a margin squeeze. That's what we can now observe in these companies. So the trade war is definitely having some squeeze in the Chinese economy.
Great. And Althea, we've talked about EM. If you look at the currencies, it's very obviously there's EM contagion across the currencies, and I'm sure that's being seen in the EM bond spreads. But you're focusing a little bit on maybe the relationship between Italy and the Turkish situation.
Yes, absolutely, John. I think that actually what has happened in Turkey in the last few days, it's something that is very alarming, not only for the emerging market, but also for the developed world. And the reason being is that when we have seen yesterday investors selling in Turkish government bonds, we have seen also investors selling off to riskier assets. And although, for example, like Peter mentioned, in Europe, Spain with BBVA is the biggest holder of claims against Turkey. Actually, the government bonds to suffer the most out of this volatility were BTPs. Right. And in this space, as we can see, we have a chart here. In green.
Just want to briefly, just so we see what we're seeing here on the chart, the 2-year is the orange. It closed around 133 basis points yesterday, back down to 120 I saw before we came in here to do the broadcast, and then the 10-year up at well above 3%. Yeah.
Exactly, and what is the most worrying factor is actually that there has been even more volatilities in the 2 years rather than in the 10 years. Yesterday, the 10 years moved for approximately 7 basis points, while the 2 years moved around 20 basis points, which is a huge move for a very short-term developed government bond yield. I think that the story here it's very different from what actually we have seen in the news. The news today is pretty calm. Investors seems that are risk on, but I believe that what is not making me sleep at night is that the volatility in Turkey actually is affecting Europe, and if we see some kind of fragility in the Italian banking sector, then we can see then risk kind of summing up. And this Friday we have the current account balance numbers coming out of Italy, and this can put further stress in actually already kind of distressed government bonds in Europe.
Yeah. And I think that's also, if you look at the euro, I think it's one of the drivers of the euro is that Italian yield as well. Even before we saw the Turkish situation blowing up, we saw euro starting to suffer a bit back and forth on worries centered on Italy and the whole EU existential risk trade. Peter, there was one thing I wanted to get back to, because we had this interesting discussion earlier about the DAX and DAX components, and you made a very interesting point that I think is worth repeating about the big German banks.
Yeah, sure. So the performance year to date is that the Commerzbank and Deutsche Bank, the two largest banks in Germany, have the worst performance among the major German equities. And it looks right now that if we get into the next, if the current developments continue and we get to the next review of the DAX index, which is the leading index on German equities, those two banks will be put out of the index.
And then that Bayer hit also must have been taking the DAX a bit divergently down relative to some of the other indexes.
Exactly, but that has been a main point from our side, that Germany has this trade deficit, so they are a vulnerable equity market in the current trade war regime. So German equities should be underweight because of their tie back into China in a very cyclical economy.
Right. And finally, I wanted to wrap off the things here with a couple of commodity points. One of those being, just note the cotton chart. Cotton is a very Turkish-sensitive commodity. Turkey is an enormous producer of textiles, and they're very focused there. There was also a report last Friday on the outlook for production, and it was much better than was expected. There's a big speculative long. Our commodity strategist, Ole Hansen, has pointed out. And then finally on gold, I wanted to point this out. I talked a little bit yesterday about, I was wondering, given there's almost seems to be an implicit peg or a approximate peg of the CNY, the Chinese renminbi with gold, and that one way to potentially speculate on a CNY devaluation was via gold shorts. And we did break below a very interesting level in gold without that move also feeding into the Chinese currency yesterday. Very interesting to see gold down to 11.92 while dollar CNY has held the line. So keep an eye on that. Could be a theme, just a thought there. And our strategist Ola also pointing out that 11.80 is a big trend line. So keep that in your sights as well. Finally, we'll wrap it off with a look at the calendar for today and the rest of the week, and further afield. Not much. We have some UK data. I think the focus there very much on the euro side with existential risks, on the pound side with Brexit, a story where we're not getting new information and uncertainty reigns. And then we have that interesting German ZEW survey, which has really begun to sour in recent months. I won't really talk about the forward calendar. I would just suggest that the main thing on our horizon, besides developments in Turkey, risk on, risk off, is the Fed. The Fed is the world's central banker, and the biggest signal would be potentially something at that Jackson Hole conference. We'll talk more about that. That comes up not until next Friday. But if the world is suddenly financial markets are on their knees, people are inevitably going to look to the Fed for the next signal on what the central banks and policymakers plan to do about the situation. That's it for us today. We'll be back tomorrow with another edition of the Saxo Bank Morning Call.